And good morning, everybody. Good morning, fellow weirdos. This is Eureka John, Eureka Street Crypto Hub, and I'm broadcasting live at 5:58 in the morning on February 23rd, 2021, Leander, Texas, Central Standard Time. Anyway, just up early and ready to do this broadcast and get my day started. It has been an interesting... gotta adjust that camera there. All right, it has been an interesting week so far, yesterday and today in crypto. We had a major flash crash. Well, we had a flash crash, and then we had kind of an actual crash. Well, not kind of. Pretty much an actual crash. So that's kind of exciting, actually. Doesn't really bother me all that much. I know a lot of people are screaming blood in the streets, doom and gloom and all that stuff, you know. All the stuff, the newbies and gold bugs saying I told you so and stuff like that in the traditional finance sector likes to point fingers. All the typical stuff that anybody who's ever been into crypto is basically used to by now. So, yeah, that's that. Let's take a look at CoinGecko and let's see where Bitcoin is. $45,714.94. So it, in the past 24 hours, it's dropped 16.4%. You know, that happens. Welcome to crypto if you're new here. This is, I remember in March, it dropped 40%. And, you know, I'm not in this to make a quick, easy profit. Not even within the next few months here, and not even within probably this year. Maybe next year I might pull out some profits, but everything I put in there is to stay for a while. You know, I'm camping out, so this type of crash doesn't bother me. Actually, it's a really good time to jump in and get some more. I did buy some Chainlink on Sunday. Wish I would have waited till today, but I still got it, you know, about 8 or 10% lower than what it was, or on Monday. Yes, I bought Chainlink yesterday, so I still got it about 8.7% lower than what it was 24 hours before that. But shoot, might even buy some more. Dollar cost average, that's the way to go, right? You buy at the dollar cost average, and right now things are at an extreme discount. So that's definitely the way I think a lot of people should be looking at this, because it's not going to stay this way for long. Crypto's here to stay. The world is changing. The fourth industrial revolution is coming in, and you know, the Internet of Things is taking over, and all that is based on what? The blockchain and crypto. If you look at the details outside of Bitcoin, that's the problem, is that a lot of normal people, they think that the crypto world is Bitcoin, and then some may think it's Ethereum. Okay, sure, yes, Bitcoin and Ethereum are a part of it, but Bitcoin is a store of value. Ethereum's kind of a world computer that enables smart contracts, and that kind of gets you a little deeper. But there's tons of other projects being developed right now, or are developed, that will completely change the way we use things and think and interact with the world around us, and it'll change the economy. Like it or not, it's all laid out in the World Economic Forum blue plans. You just go to their website and you can see it all. You will own nothing and you will like it and all that stuff. But what they mean behind those words, of those propaganda words, is we are going into a tokenized society, and basically we're all going to own little pieces and tokens of these assets, and nobody will completely own everything, and it'll be a service-driven economy. What's up, Valera? Let me gift you a little item. I've got recharged on some tea fuel. I like it when people tune in live, because I know it's early for me. I'm not sure where Valera is. Where are you at, Valera? Yeah. So we're going into 5G, Internet of Things, a tokenized society. All this is based on the blockchain. Cryptocurrency has a place to stay, and yes, we have a dip right now, and that dip is needed. It was needed. Things couldn't keep going the way they were, and we need to just hold steady and believe in where things are going, and I do, and I am holding steady, and I'm gonna keep on dollar cost averaging my way into the projects that I think are worthwhile, which are Bitcoin, Ethereum, Polkadot, Cardano, Chainlink. I like Uniswap, Aave, Theta Network for sure, Unibright, Synthetics Network. I think VeChain is worthwhile. I don't have anything in that right now. Elrond. I need to look deeper at the graph. Zilliqa. So these are all projects at Ren that I think are going places. I'm going to be doing my video on Hedera hash graph, I promise. I have all the basic research done for it. I just need to put it together and go from there. Oh, I left out Ocean Protocol is going to be a huge part of this next fourth industrial revolution. I think Chainlink and Ocean Protocol, I mean, man, those are going to be huge. You got to put the data onto the blockchain. That's what Chainlink does. And then Ocean Protocol democratizes the data so it's not all centralized, and it creates a data marketplace for everybody to buy and sell their data. Data is the new oil. That's going to be the new commodity. So anything that processes or deals with data, you probably want to be a part of. So just do your own research. I know that's thrown around a lot, but seriously, do your own research. Look into the use cases of these projects. It's very important. And I know a lot of Bitcoin maximalists just completely crap on people that believe in altcoins. Well, Bitcoin's a store of value. That's great. But they're, like I said, fourth industrial revolution is here. And all these new projects, these quote unquote shite coins, are part of this fourth industrial revolution. And you're going to get caught with your pants down. That's all I'm saying. Anyway, so let's look at some of this news. Pretty much every single bit about the news and piece in the news is about the crash right now. Bitcoin expects to retest record highs after Powell's testimony. I don't really know a whole lot about all these politics. I just kind of try to read what I can, but I don't consider myself some kind of know-it-all when it comes down to what the White House is doing and the Federal Reserve is doing with all this stuff. However, some talking points: rising inflation hopes, depressed real rates, and beaten U.S. dollar may underpin Bitcoin prices in the sessions ahead. Yes, the dollar is being beaten down. All these stimulus checks, and we have possibly another one coming. I believe the last stimulus allocation was $1.6 trillion, and now it's going to be $3 trillion. So hold on, let's see what's going to happen. And then holding the 20-day simple moving averages support could trigger upside bias. I agree. Meanwhile, an extended downside correction could also let the market retain its long-term bullish sentiment. And that's exactly true. 2 steps forward, 1 step back. If you don't have a step back, then it's pretty much vaporware. Bitcoin fell by almost 20%, touching its record high of 58,367 on Sunday as traders decided to secure their profits against U.S. economy's recovery prospects. Yeah, I mean, is the U.S. economy really going to fully recover? At this point, I think it's kind of beyond recovery, but that's me. Dovish Fed chairman. Per his previous statements, Mr. Powell may reiterate the central bank's commitment to supporting the U.S. economy by keeping benchmark rates at record lows while continuing to purchase at least $40 billion of mortgage, $40, and $80 billion of treasury notes every month. Wow. Okay. It will continue the quantitative easing program until the U.S. economy achieves maximum employment and price stability goals. So if you don't know what quantitative easing is, it basically means let's print a bunch of counterfeit money and puff up the economy until they can get their crap together. And the thing is they're never going to get their crap together. And let's look into what dovish means. Okay. So let's see. Being dove-ish on economy. Let's see what we get with that. Doves tend to support low interest rates and an expansionary monetary policy because they value indicators like low unemployment over keeping inflation low. If an economist suggests that inflation has few negative effects or calls for quantitative easing, then they are a dove or labeled as dovish. Okay, yeah, so that's what dovish means. So, and then monetary hawk and a dove. I guess, yeah, Janet Yellen is described as a hawk during the economic boom in the 1990s. Anyway, I don't want to get too sidetracked with that, but yeah, they're basically talking about how Mr. Powell wants to keep printing. Keep printing. Where's that meme that just shows him up there just printing away? Anyway, see, and here we go. Some more of this Bitcoin drop alongside tech stocks as bond yields rise. If you don't know anything about money in the economy, generally whenever high risk assets like stocks completely crash, bonds rise, and it's kind of like a seesaw between the two. And if you're a younger investor, you want to invest in more high risk investments like cryptocurrency and higher risk stocks and things like that, and things that can potentially produce high yield, where a lot of times if you're older and retired or later in life, you want to invest in bonds to have that stability. I've never really had a lot of money, so I didn't realize how difficult it was actually to maintain wealth once you have it. And so you want to invest on all spectrums of that, and high risk and then more secure bonds, and put your money in different places, so if one sector drops out, then you still have money left. That Tony Robbins book, Money, is actually a really good book for somebody who knows zero about money, and that was me just about a year and a half ago or 2 years ago. So read that book. It's actually really good. It's a little outdated now, but it's still really good. Anyway, Bitcoin fell sharply on Monday and continued declining into the early Tuesday session as traders feared its excessive valuations after a 100% rise this year. I mean, they're really not telling us anything we don't know. Corporate boom in Bitcoin space. All the said assets were trading at records before posting broad declines. That raised concerns among traders that the cryptocurrency market is getting capitulated. A reminder of a crash in 2018 that followed a supersonic bull run in the previous year. I don't think we're there yet. We're not at 2017 levels. We're not at supersonic bull run yet. We will be getting there. That's just me, but I believe we are just beginning, and this is just the little, I guess, setback before we completely explode. The last couple months saw MicroStrategy, a public listed software intelligence firm, upping their Bitcoin reserves to more than 71,000. Tesla, a Fortune 500 company, also purchased $1.5 billion worth of Bitcoin in February that propelled the cryptocurrency market's cap above $1 trillion for the first time in history. Meanwhile, PayPal launched a crypto-enabled service onto its traditional payment platform. MasterCard announces entry into the emerging space, and Bank of New York Mellon took a similar call, stating it would integrate Bitcoin custodianship services into the platform that its clients use for securities and cash. Anyway, it goes on and just, all right, I don't need to read the rest of this article right now. We're just getting started, and this crash right now is the perfect time to jump in and get your marbles together, because stuff's about to get crazy. And then we had yesterday a little blip on the line where Ethereum was going like this, and then dropped down to 700 from 1700, and then it went back up, and then it kept going at 1700, and that was a flash crash. That's what that's called. And a lot of people, when they have things leveraged, which means they have their assets like Ethereum or Bitcoin or whatever locked up as collateral on loans taken out, that collateral, if it hits a certain percentage, then their loan will automatically liquidate. Basically, their collateral will liquidate, and they'll lose that loan. And that the money in collateral will instantly pay back their loan. So wherever they had that money out there that they borrowed, suddenly they better do something about that. So what happens is tons of people got liquidated during this flash crash because what they have, or they have stop losses. And what a stop loss is if the market gets down to a certain number, if the value of a certain asset gets down to a certain number, then it automatically sells. People do this as some kind of security blanket whenever they're trading, or not trading, or just holding assets. I don't have any stop losses because of stuff like this, flash crashes. I've seen a few flash crashes happen in the past couple years, and I've decided against stop losses. But some people just feel more secure on stop losses. They feel like, if suddenly the market completely tanks, then they will have recovered some of their money. However, in the past couple of years, I've seen this. I've never seen the market completely tank. I mean, yes, this is kind of tanking right now, but this is not going to stay like this. That's what people have, this idea in their head that something's just going to tank and stay there. It's not going to stay there, folks. The market tanks all the time. Crypto, if you've spent any little amount of time in crypto, you know the market's going to go down and up. It just does. So stop losses, all it's going to do is just put a thumb in your butt, basically, and you're going to lose money doing stop losses. If you're in crypto, you just need to be in crypto for a while. Pull up a chair, and stick to it for a while. Don't just jump in, put in some stop losses, and expect things to behave like the stock market. I'm not even a trader. I'm barely financially illiterate, and I know this. So, but they're all butthurt about it, considering a lawsuit. February 22nd, multiple Kraken price pairs deviated from the market value. Ethereum crashed almost 700 despite the market value being around 1,600, while Cardano and Bitcoin also saw price dips that didn't match the market. Kraken users reached out to Crypto Briefing with trader Luca Mazzieri, sharing that he had lost 46 Ethereum. That's quite a bit. Adding that many other people lost their investments as also. It's about $90,000. That's a lot. So they're all pissed. I mean, I understand their sentiment. Some artificial looking flash crash made this guy lose about $90,000 or so. So that's understandable about people being upset. And it does look artificial. It looks like something that the exchanges all got together and decided that they were going to have a flash crash and liquidate and shake out a lot of people, and for whatever reasons. But nobody can prove anything like that. And stop losses are there, and people use them, whether it's wise or not. And these traders, they're traders. They should know better. They're in the game with the realization that they may lose a bunch of money, and never invest more than you can afford to lose. So that's that. Anyway, I'll jump off that tirade real quick. Let's see where I am. I'm at 18 minutes and 45 seconds. I want to switch gears real quick and talk about one of my favorite subjects, which is DeFi. Decentralized finance is basically automated protocols where you lock away your crypto and are able to borrow against it, and which this flash crash affected a lot of those people and their DeFi being liquidated. But I don't have anything in DeFi projects right now, honestly. But I have messed with them before. I've messed with Aave and Synthetics, and I like DeFi. I love reading about all the different projects and their nuances and all that stuff. I don't necessarily want to invest in them right now, but I just think they're really cool. I mean, I do hold some DeFi tokens, so I guess I'm investing in that way. But I don't use DeFi right now. Maybe I will sometime soon here. But there's just so many cool projects popping up. This year has been undoubtedly one of the most bullish years for cryptocurrencies. Let's see here. When it comes to assessing the potential value of a project, one simple metric stands out above all else: market capitalization. Early stage projects with significant potential but a relatively low market cap represent the most potentially lucrative opportunities, since they have the potential to achieve considerable growth. But it takes a discernible eye to separate the hype jobs from the projects with genuine prospects. Here we look at 3 projects we think have fundamentals, community, and products necessary to explode in the near future. So yes, in DeFi, especially in July, during the major DeFi boom, July of 2020, DeFi was exploding, and there was just so many weird little projects coming out, and I would just see YouTuber after YouTuber just go through and talk about some of the most insanely dumb projects with like 3,000% APY and stuff like that, and it's just like, really? You would seriously dump your hard-earned money into something like, named after vegetables or whatever, like, but yeah, people are doing it, and people are still doing it, I mean, look at Pancake Swap. Pancake Swap is actually really legit, but it's got a bunch of little funny names. Anyway, here's one called Prophecy. It's an interesting one. Like Bitcoin, it's built to provide an entirely new financial ecosystem that solves some of the biggest gripes with traditional money. It's also created by an ethical, anonymous team that puts its community at the forefront while operating in the background to build a suite of DeFi financial products. Unlike many other blockchain protocols, which are typically just a copy and paste of something else, and that's the thing, a lot of these DeFi projects that you see that popped out in July, they're basically somebody going into GitHub, copying and pasting, then adding a few little features and putting a different interface on it, and then advertising 3,000% APY because they're out there gambling with your money. But here's where it gets even more interesting. Prophecy isn't just providing a sound monetary unit in the PRY token or a next generation economic protocol. It's also building an entire range of products that leverage this technology to provide a range of use cases to PRY holders. The first of these is going live very soon: profit pools, which essentially yield pools that accelerate the earning process to a matter of hours or days. So there's about 8 different financial solutions. So basically one of these things, we're like, yeah, we're gonna. So it's great, you're gonna, but let's see what they're gonna do. Here's their website, prophecyproject.io. Yeah, I mean, I'll look at this a little deeper. It looks pretty cool. Finance reimagined, value transfer network, economically incentivized actors that come to consensus on the state of the network's economic policy. Okay. All right. So there's that. Then we have EasyFi. What makes EasyFi special? Basically, they use Matic Network, now Polygon. And Matic Network is a layer 2 solution on the Ethereum blockchain. And if you don't know what layer 2 solution means, it means something on top of the Ethereum blockchain. So the problem with Ethereum right now is the really high gas fees. And what Matic is doing, it's helping to ease that problem by through code protocols. I'm not going to go into the technical details because I don't know them, but it basically lowers the gas fees. So here is their website, EasyFi. Go check that out, easyfi.network. A real catalyst for adoption of DeFi. It's a protocol built with a vision to solve some of the inherent challenges faced by Generation 1 DeFi solutions with respect to the transaction speed and cost, which are a bottleneck for DeFi operations at scale. And that is absolutely true. If you're trying to use any type of DeFi program, I've used Acropolis as well. I use Aave right now. I've used Acropolis in the past. I've used Synthetics. And one thing that they all have in common is if you're gonna put in or take out money, especially, or do anything within those DeFi programs after you've had stuff locked in, it costs a buttload of Ethereum and gas fees. And one of the things that is helping to ease that are layer 2 solutions, and Matic, now Polygon, is helping to do that. And this protocol utilizes the Polygon network and for all these features. So here's the Matic logo, Polygon logo, and there's EasyFi. So the yield farming, amazing UI UX with gasless transactions. That's really good. I mean, because it costs a buttload of gas to do anything in a DeFi protocol. So this is really good news. I actually think I will more in-depthly check this out. I do love these layer 2 solutions coming out. And then here's a third one down here called Ramp. It's a DeFi platform that aims to produce cross-chain liquidity for on-off ramp that allows users of non-ERC20 assets to quickly and easily utilize their staked assets by depositing them on the platform to mint a stablecoin known as RUSD. It's issued on the Ethereum blockchain. It then can be used to participate in the extensive Ethereum DeFi ecosystem without having to exchange cross-chain assets they deposited as collateral. All right, so this one's solving a cross-chain compatibility issue. As I've said in previous videos, Ethereum is not blockchain, is not Polkadot, is not Zilliqa. These are all different blockchains, and they are not compatible with each other. And there is a huge demand and push for interoperability lately. One of which Quant Network is trying to solve right now. I did a video on Quant Network pretty recently. So here's Ramp DeFi, and basically you can lock assets of various different blockchains into here, and then you earn the RUSD token, and from there you can do any type of transactions with it. So here they have IOST, Tomo Chain, Tezos, Injective Protocol, the Graph. Now, these are their partners: Elrond, Solana, Icon, Stone DeFi, Nules, Moonstake, MetaNext Crust, Alliance Block. Okay, so they have some good partners. I mean, I'm just really just kind of on the surface touching the websites and just taking a look and seeing what's out there. I'm not endorsing any of these. Check them out for yourself and see what you think. Let me know what you think is worth it. I'm going to dig a little deeper into all these. I'm just really, you're looking at this with you right now and taking a quick look, and I'll get into their light papers and white papers and whatnot. If I find something that's particularly interesting about one of these projects to dig a little further. Actually, I do want to dig a little further right off the bat into EasyFi, because I love layer 2 type of solutions, and I am a big fan of Matic, now Polygon. So yeah, I will check into that. Anyway, guys, hit that like button. It helps me out. And if you don't like what I'm talking about, then don't hit the like button. So I'm not asking you for any money. I do have a Patreon, but I don't have anybody that's done anything on it. So, and whatever, it's just another place for me to put my videos. So I have an Instagram account, Eureka Street Crypto Hub, and I have my Twitter, Eureka John 1, the number 1. It's not just Eureka John. Some other schmo got that one. And then I do have my unstoppable domain, eurekajohn.crypto, and then yeah, that's how you can get a hold of me. And I love talking shop. Hit me up, throw me a DM or whatever. They're always open. And yeah, right now I don't really have that many listeners, and I'm all right with that. I'm learning how to do all this, and the less listeners and audience I have out there, actually, the better, while I kind of fumble my way through all this stuff. So, all right, man, I've been going on for 28 minutes. I got to get my butt to work. I got to make my smoothie and do life. So I'm going to finish up everything on this Hedera Hashgraph project, and have a video out for you tomorrow. And yeah, let's take a look at Hedera tomorrow and see what you guys think. All right, man. Well, I'll talk to you later. Bye.